I'm Michael Yardney, and today I'd like to talk about one of the keys to successful property investment. Now look, it may seem obvious, but I've got to start with it. In order to create long-term wealth from property, it's important to know the type of property that's going to be in continuous, strong demand in the future. Now, while many investors think about what will be popular with tenants or the rent they're going to achieve, that's not what I look for in an investment. To me, a good investment property is one that will always be in strong demand by owner-occupiers. Think about it. Home buyers purchase around 70% of all the properties on the market, and they're the ones that push up property values. On the other hand, the type of property that's more influenced by investor demand or by tenant trends and requirements, they tend to be more illiquid and volatile in price. If you don't believe me, just try selling a property in an inner city high-rise block today, or in one of the mining towns or a student accommodation, and see if you find any buyers. On the other hand, well-located properties that are popular with owner-occupiers are always in strong demand. Now, before I go any further, I'd like to quickly remind you that I'm doing a series of seminars around Australia that I've called How to Prosper in a Flat and Falling Property Market. Look, there's no sugarcoating it. The market is very, very different to a year or two ago. Now, I've traded through flat markets in the early 2000s for 3 years or so. In the early 1990s, I guess it was 5 or 6 years of pretty flat property market. In the 80s, it was the same, and even in the 70s. So I know how to prosper. I actually know how to do very well in a flat and falling property market, as do my co-presenters Ken Race from Chan & Naylor Accountants and Rolf Schaefer from Metropole Finance. So please click on the link below, find out about these seminars. They're one-day trainings around Australia in August and September, and I look forward to seeing you there. Now back to the key to successful property investment. I was talking about finding the sort of property that will always be in strong demand by owner-occupiers. If you've got that sort of property, that means valuers are going to be happy to put their stamp of approval on them, and banks are going to be happy to lend against them. What this really means is you're going to have to understand the needs of our changing markets to be successful. To be successful in securing the sort of properties that are going to attract above average growth in the years ahead. Because despite us having flat markets, some properties are still going to perform well. And one of the keys to this is studying demographics. That's the number of people, the composition of our population and how we choose to live. Interestingly, Australian demographics are undergoing some radical changes at present. With housing affordability becoming an increasing issue for many first-home buyers, and our lifestyles becoming a lot more hectic, we're seeing an increase in the popularity of medium-density apartments. Living that way appeals to the younger generation of Australians. Rather than live in a house with a front and backyard, they're keen to live close to where they work, where they entertain, and they're happy to swap the backyard for a balcony. Now clearly this is very different to the way their parents chose to live. The fact is, the property investor of the future is going to be catering for a whole new breed of tenants and buyers. Look, think about it. Gen Y is on the move. As many from this 15 to 24-year-old age group over the next little while is going to start thinking about leaving the family home and starting on their own. In 2010, around 150,000 new households were created in Australia. But you know what? About 65,000 of these comprise Gen Ys, singles, groups or couples. Isn't that interesting? The majority of the young demographic are going to be destined to live as tenants for quite some time. You see, they're going to be stuck on the rental roundabout due to increasing house prices, the cost of living, interest rate uncertainties, and of course rising rents, which is going to make it harder for them to save. In fact, most of these young Gen Ys aren't going to buy their first property until they're well into their 30s. As a result, many choose to live in shared accommodation or multi-income households in order to reside in the locations they favour. But those sort of locations they couldn't afford to be in as a home buyer. So these include those inner ring suburbs close to our major CBDs where there's employment opportunities, where they've got that fast-paced life with plenty of recreation and entertainment, where all the facilities are, where all the attractions are. Look, with the number of Gen Ys looking for accommodation continuing to rise, rental demand for near city and inner suburban apartments is going to grow significantly in the coming years. And you know what? Our old friend of supply and demand, are going to ensure that rents for these type of properties keep rising. And at the same time, their values are going to increase. Partly due to scarcity, partly due to the cost of replacing them, and partly due to higher rental yields. This means that today, medium density properties, and by that I mean apartments and townhouses, not the high density ones, not the high rise ones, but medium density properties make great investments. And in general, they appreciate in value equally, if not more than houses in our capital city. Now, of course, this is in part due to affordability, as apartments offer a much more affordable alternative to housing options. But it's actually much, much more than affordability that makes the right price of apartments go up so much. Significant changes in our population profile and lifestyle priorities are creating a strong demand for apartment living. Today, our lifestyles are vastly different to those of our parents. We're working longer hours, we're increasingly time poor, we're starting families much later in life. This means proximity to work, to transport, to entertainments, to cafes, to shops, to beaches is becoming much more important than owning a piece of land with a front and backyard. In Australia's capital cities, apartments are also continuing to improve in design and size. And they're generally much closer to the CBD than affordable houses. Now, of course, there's always going to be a demand for houses with front and backyards, particularly from families with more than one child. Yet there's definitely a shift towards apartment living. And it should be fairly obvious that this trend is going to continue in the long term. As I started to say, people are starting to get married later in life, and apartments suit their busy lifestyle. And when a baby comes along, they're often going to stay in their apartment or buy a bigger one in the same location. And don't forget baby boomers, they're starting to move into retirement, and they're also going to... And don't forget, as baby boomers move into retirement, they're also significantly going to increase the demand for townhouses and apartment living. What they're looking for is low maintenance, secure lock and leave living. Now, according to RP data, capital city units and apartments only accounted for about a quarter of all home sales 15 years ago. But today, medium and high density accommodation makes up about 35% of all home sales. Now, that's an interesting trend, isn't it? If you look more deeply into it, in our two most densely populated capital cities, RP data found that the proportion of unit sales is even larger than that. Just back a year or so ago, in the month of August in 2010, Sydney and Melbourne unit sales were about 43% and 37% of all dwelling sales respectively. That's a huge amount. So if you're looking for a great investment, you should seriously consider looking for a well-positioned, established apartment in a smaller boutique block, and if you can, one with value-add potential through renovations. I'd look for a property with a twist, with something special, or maybe just with an element of scarcity. Then hold it as long-term investment and reap the rewards. Now, a word of caution. Of course, not all apartments are going to make good investments. And with all the changes going on in the world of property, tax and finance, if you really want to understand what's going to happen to our property markets, what to watch out for and what the future holds, and in particular, how to avoid the pitfalls, like buying in all those suburbs where prices are falling, then please join me at the only round of public seminars I'm going to be conducting until well into next year. Please click on the link below to join me, Rolf Schafer and Ken Race at our How to Prosper in a Flat or Falling Property Market seminars. I'm going to be conducting those around Australia in August and September. When you join, you're going to discover unbiased research, the sort of things that sophisticated investors have been using to profit in good times and bad. The truth is, a select group of informed investors, they're smiling, they're happy, they're excited about all these mixed messages that's in the media at the moment, because they know that while the majority of Australians, they're going to wait until the confusion clears, fortunes are going to be made by those who understand what's really going on in our property markets. Now, even if you've been to one of my seminars before, please join us this time round. Look, remember, we've got no properties to sell, so we can give you unbiased facts and the sort of perspective you can only get from being in the market for more than 30 years or so. So click on the link below and find out. Now, between now and then, I'm going to keep sending you my regular Property Update e-magazine, But I'd like to remind you that if you want to find out a bit more before then, why not join the independent property specialists at Metropole at a briefing at their offices in Melbourne, Sydney or Brisbane. These briefings are free, so you can just click on the link down below. I'm going to be sending you my regular property update again in a fortnight, but in the meantime you can subscribe to my blog. See, so much is happening in the markets at the moment. I'm sending out a daily blog. That's a different subscription to the annual newsletter. Gee, I've given you a lot of information. The easy thing is subscribe to the blog by clicking the link up above. Join us at the seminar, and I look forward to sending you another update in 2 weeks' time.